Century on the Nifty, there you have it, 100 points and there time for the bulls to raise their bat. 10,828 for the Nifty. The Sensex almost closing in on that 4th-century mark, 375 points on the Sensex. Nifty Bank, Nigel, almost a 200 point.
Almost 200 runs out there. I mean, splendid going over here. They're seeing the ball nice and big. It's coming onto the bat nicely and they're hitting it out of the park.
Absolutely. Let's see who all are hitting it out of the park, actually. You have the FMCG stocks, of course. HUL, Titan, Asian Paints has joined that list. Infosys is doing fairly well as well. And this, remember, despite the rupee strengthening. So the IT stocks, they've been doing fairly well over the last 3 trading sessions, continuing their uptake for Infosys itself. Over the last 3 trading sessions, Infosys has gained about 8.5–9% at the high point of the day now. And we have Lupin and Bajaj Finance doing too well too. So, yeah, all the batsmen firing as we speak. The Nifty raising its bat with a 100-point move. With that, we shift focus to the big national story now. The Supreme Court will hear the petition filed by Alok Verma against the CVC order of removing him from active duty as CBI Director. Ashmit Kumar now joins us on the phone line with all the details. Ashmit, take it away.
Well, clearly a big day, another showdown at the hands of the Apex Court. The two set of counsels rather, one for Alok Verma, the other one for Rakesh Asthana will face off again. Of course, this comes on the back of the CVC report which had been submitted. CVC had been probing charges that were leveled against Alok Verma. That report had been filed and subsequently Justice Gogoi had observed that some of the findings of the report are favourable while some others are uncomplimentary in nature. But nonetheless, Alok Verma had been asked to file a reply. He did file a reply, again within a sealed cover. However, within that time period, M.K. Sinha, another CBI officer, had filed an application which had made various charges unsubstantiated, but charges nonetheless against none other than the NSA chief Ajit Doval himself, that he has been interfering in the investigations against Rakesh Asthana, that he has been pressurizing Alok Verma. And while those charges were being made, CJI Justice Gogoi, he lashed out at the Alok Verma camp for what he was referring to. Again, a thinly veiled reference, but nonetheless, Justice Gogoi lashed out saying that this is not a platform, that the court is not a platform for airing of such insinuations. He lashed out at the Alok Verma camp for leakages as far as the Alok Verma response is concerned. And on the back of that, the hearing had been deferred to today. Now, what can we expect from today? Essentially, the big question that's on everyone's mind is that will the Apex Court go ahead and reinstate Alok Verma? If it chooses to not do so, then the obvious question that arises is, will there be a further investigation of the charges against him? And what does this do as far as the Rafale deal is concerned? Keep in mind that the Supreme Court has also reserved its judgment in the Rafale matter. The prayer in the Rafale case is quite clear that a CBI investigation is sought, but with the current state of affairs, there can be no investigation. So clearly, all eyes now on today's hearing and the road forward that the Apex Court will map out as far as this CBI versus CBI saga is concerned. Back to you.
Okay, thanks so much, Ashmit, for joining in and giving us all those details. Well, let's shift focus now and let's talk about the GST collections. Remember, if in fact the crude oil prices were going up, that's going to hurt our deficit numbers. But what could help is the GST collections really pick up. So those are the two factors that the street is looking at. Crude oil prices as well as how are the GST collections shaping up. And that's our next CNBC TV 18 exclusive then. Sources tell us that the GST collections for October, that's recorded in November, is likely to come in at around 97,000 crore rupees. Timsi Jaipuria joins us with all those exclusive details. Timsi, over to you.
Well, as you rightly mentioned, GST collections are likely to come a little lower than the last month, where we saw that for the first time in the current fiscal, GST collections had crossed 1 lakh crore mark. But this time, for the collections of October, which were recorded in November, the trend is of slightly lower collections, coming down to 97,000 odd crore rupees. And yes, government feels that this is because of the festival sales have cooled off. Secondly, the rupee appreciation is also one of the reasons, because you get customs, imports, etc. collections also recorded in this. And now that rupee has cooled off a little bit, stabilization has also led to a little lower collections. But nonetheless, government is quite hopeful that in the months to come from January onwards, the collections are likely to pick up yet again going forward for over 1 lakh crore rupee mark. So let's see what are the final numbers when government releases them on 1st of December. But yes, right now sources indicate that around 67 lakh businesses have registered and paid so far, and the collections are likely to be a little lower at 97,000 odd crore rupees.
Right, Nimsi, thanks a lot for that. Those are the numbers that the street will be watching for very, very closely as far as GST collections are concerned. But right now I'm watching or taking a look at the markets. A double century for the Nifty Bank has been achieved, 2 bats raised out there, and the Sensex 2 hit the quadruple century 400-point mark. And now maybe we're counting down to a century for the mid-cap index, which is otherwise underperforming with a gain of just about 66 points. So counting down to that one. But talking about counting down, as the countdown for 2019 general elections begins, the Modi government is likely to go as per tradition and present a vote on account in 2019 instead of a full budget. Sapna Das joins in with more details. Sapna, what are you picking up?
Well, we are clearly given to understand that most likely it's going to be a vote on account. That's what the government seems to be preparing for as per convention. And the convention always has been that it's an interim budget or a vote on account in an election year. Having said that, what this would really mean is that the government will seek the parliament's nod for 4 months of expenditure, April, May, June, July, for the new financial year. Although the revenue and the expenditure estimates are always done for the full fiscal. So that does not change. But what changes is the appropriation bill will be for 4 months, which will allow the government to seek the parliament not to, draw the funds from the Consolidated Fund of India and do the expenditure for 4 months till a full government or a new government comes into place. Having said that, the other thing we need to keep in mind is that in terms of new announcements or any future roadmap for reform, that's completely a political call. But nothing prevents the government from, announcing schemes, and it's not necessary that you have to come out with an immediate expenditure outlay for that. For example, the Ayushman Bharat can be kept in mind. The announcement came in this financial year in the finance minister's budget speech, but it took some time for the government to kind of, explain the expenditure outlay, and even that has not been fully outlined so far, in the current year's budget. So something may come forward on that front. So that's an example that I'm just giving. So nothing prevents the government from making these announcements, but that's again a political call. Last but not the least, no direct tax changes. What the finance bill will basically seek is a continuation of the existing direct tax laws. So no changes there. Continuation till the full budget is presented sometime in July. And last but not the least, also in terms of your indirect tax changes, well, they can be done at any point in time. But it's only the customs part which remains purely with the central government. The rest of the things have been given over to the GST Council.
Thanks so much for that, Sapna. Well, Mangalam's in cricketing mood this morning. He's talking about everyone raising their bats, celebrating centuries, double centuries. But Yes Bank, that seems to have got the googly, and it's clean bowled actually because it's down close to 8%.
It's a no ball.
When you have the entire market that's at the high point of the day, and that stock continues to reel under pressure. Mangalam, if I get that numbers right, I think the book value for the next couple of years is estimated at around 150, 160 rupees. So it's trading at less than one time price to book. But as we always discuss, the risk is in the book itself and various other risks as well. And the stock is just selling off. Remember, the markets are up 100 points and Yes Bank has moved to the low point of the day. So these are clearly some concerning signs as well because the stock is just moving lower. On the flip side, Piramal Enterprises, that was a stock that was under pressure a couple of days ago because of the exposure to the Lodha Group. We had the Lodha Group that joined us yesterday. They said that, all is well. We have not defaulted on any payment and everything. The bond yield that had moved up is on a very thinly traded bond. That stock, Piramal Enterprises, after the clarification from Lodha Group to CNBC TV 18, the stock has recovered close to 6-7% from yesterday's lows. So just keep an eye out.
Nifty, which is above the 10,800 mark, will be very interesting to see how the options data stacks up ahead of expiry. So the 10,800 put, that one's added 34 lakh shares in open interest just the first few hours of trade, 1.5 hour of trade. And the bulls believe 10,800 is the mark they can protect for a premium of 16 points. So with that, we wrap up on Chartbusters. But as we do that, we leave you with some market opinion coming in from Ashwini Agarwal of Ashmore Investment Management.
A weakness in the US dollar historically has meant strength in emerging markets. We also felt that the sell-off in the emerging markets that had happened year to date at that point in time was a little too excessive. We weren't seeing any significant imbalances in the emerging market story in terms of current account balances or fiscal balances. So we felt that as things started to normalize and the dollar starts to come off, we should see significant strength in emerging markets, and that's what has come through. So in a sense that, we're quite happy to see what's happened. It's in line with our expectations. I think the consensus till now was obviously a December hike and then 4 more hikes next year. So I suppose that 4 more hike commentary might come off a little bit. We are reasonably positive about earnings. We think that a softer oil, if it sustains, actually bodes very well for India and should bode well for liquidity as well. My sense is that if you were to look at the Nifty universe, it would be somewhere in the high teens or mid-teens, say somewhere in the region of 15 to 17%. That's where I would put the number at this point in time.